All right, here we go. Welcome back to the Life and Leverage podcast. Randman, how you doing, buddy?
I'm doing awesome, dude. I'm doing
Yeah,
awesome.
good
So
week.
I was able to, yeah, it's been a great week. I was able to get this computer working correctly with a camera on it. Dude, I'm stoked.
Small wins, man. Small
Yeah,
wins.
small
You know,
wins. Yeah, that's what I had today. I had a small win, but nonetheless, I had a win.
heck
A couple
yeah,
of them,
heck yeah.
actually.
I did. I actually literally right before. I'll pull it up here in a minute, but right before I was gonna jump in,
Dude, show my
I
screen.
took
Yeah,
that.
you
I
took that
took that.
NASDAQ.
I
Did you
did. I
take the
took that
NASDAQ?
Nazi on
Yeah,
the
pull it. I've got it
on
up
the
on my
Wednesday.
screen. If you want to pull it up.
Yeah, I do. Did you take it too?
I did not. I was looking at it and saying, "Hey, I want to take this." So, folks in the
Let's break
room,
this down, man.
yeah. So, make this bigger. Can everyone see that? Hopefully, you can see all.
Yeah. Yep, it's clear.
Okay. All right. So, when let's go back just a little bit.
Beautiful.
Right about here. This is when you want to start looking for an order. You're getting excited. Oh my God.
Explain the bigger picture, though. Explain
Huh?
explain
Yeah,
explain the bigger picture. What they're
The bigger
looking
picture,
at.
what's going
Why
on.
you're getting excited.
Okay,
at that
so we always are talking about taking these trades at these HVA edges. So if you look at the entire market right now,
HVA stands for high volume areas.
yep, HVAs. Hey, I'm new at this, so bear with me, folks. Especially with this type of thing, doing a video and actually being seen and that kind of thing. I still am having a difficult time getting my drawing tool to work, but that's all right. I'll figure that out as we go along. Let me see if I can find. You can see my cursor anyway.
Yeah.
So high volume areas. Okay, here's the brown area, brownish golden colored areas. High volume areas. These represent edges that Patrick draws the day before. So these are trade signals that are out there once the market gets to this HVA edge. So we've been hovering around in this whole area all morning long. And then it finally moved higher and penetrated into this HVA area. Now, we could have looked for a reversal at the bottom of this HVA area, but we never got a valid signal for this particular.
Which would have been what?
A valid signal is touching the HVA edge, the swing bar, or one of these bars. We call them swing bars when they're touching the HVA edge. And you'll be able to see that in just a second when I'm describing the reversal short. So we were waiting for the market to penetrate into this area, retrace back down to this edge, and then qualify the bar based upon the parameters that we use all the time, the max risk parameters, to see if it would qualify. Well, we never had a trade set up. Why? It never touched the HVA edge. The market continued to move higher, moved sideways a little bit, moved higher, moving sideways a little bit, and now finally moving higher. So on this next couple of bars, so now when this bar didn't quite touch that edge, okay, so now your HVA edge has been validated. You are touching the HVA edge. So now what you do is you measure the size of your swing bar, which is 11.5 and 16.75. So what is that? That's 5.5 points. Okay, so what do we use to qualify this information? We use our max risk parameters. That's ES and that's NQ. So if that swing bar is less than 17 points, guess what? It's a valid swing bar. It's 5.5 points. It's a valid swing bar. So we have to add 1 for our entry point beneath the low of the swing bar. And we have to add 2 to the size of that swing bar to get our total risk on this trade. So 5.5 plus 3 means we're risking 8.5 points from our point of entry. So we're going to be getting in at a half, 1 point below that. So we're going to be getting at 10.5. And then we have to subtract 8.5 from that to get our target. So the question is, do we have 8.5 points to run from that entry? And the answer is yes, we do, just on that information. So now we have a valid trade. I would be putting an order 1 point below the low of that swing bar as soon as it closes. And we close. Let's move over one.
Take the max risk parameters off. There we go.
Yeah. So there. All right. So now didn't quite get pulled in. Got a little bit more of a swing bar that we've got to deal with, but that's okay. We still got plenty of room to run on this trade. We didn't get brought into the trade just yet. Now we're in the trade. Now, once we get pulled into the trade, this is when we pull our other orders into play. So when you're getting
hold on
ready,
real quick there, not to cut you off, bud.
No, that's cool.
When you said room to run, why don't you explain that a little bit?
If I had a drawing tool that would work on the screen,
it's okay. Just show it right on the cross.
So yeah,
right.
So room to run. So from that point of entry, I'm looking for the market to at least get back down to this area in here. This is a step 3, because this is part of that market auction process. We know that the market hesitated and didn't go higher here. So when we ran into this area, that's resistance. When we trade through it and we come back down to it, that is support. So I know that I've got potentially room to run from here to get back down to this area. And I'm placing my stop in an area that has never been traded over today. So if I condense this back down, and you'll see that is the first time. So this white line that just appeared on the screen on the left, this is when the market opened. This is the first time that is touching the HVA edge. Fabulous, fabulous time to take a trade. First time touching in high volume area edge is the best time. It holds 70 to 80% of the time. So it doesn't hold all the time, but most of the time it will.
So you're like a kid in the candy store, man.
Oh, dude,
right now. I was like, I was just about to log in to start the podcast. I happened to look up at the screen and see what you just broke down. And I was like, yeah, turning it on, turned on the Razor's Edge and just let it do its job, man.
Yeah.
Quick 310 on two lots.
On 2 lots and 2 contracts.
Mm-hmm.
And here is it playing out. So let me blow it up a little bit so you can see it a little bit better. And here it is playing out. So that would have been the swing bar. You would have been brought in on this bar. You would have pulled your order to get out at 703 half ish. And how long were we in that trade? Less than a minute, probably, if that long. So that's how you qualify trades. This is why we were both of us were really excited about it, but I didn't take the trade because I was getting ready for the podcast. And I have found that it works best for me not to just jump into something and say, oh, yeah, and put it on there. I screw up. So,
yeah. Well,
anyway,
that's where the bots come into play, right? That's where they're helpful.
That's where the bot will come in handy. If I'd had my Razor, and you want to talk about Razor today as well, if I had Razor turned on, it would have taken that trade. I didn't.
Right.
It would have taken it here. It would have been a valid trade.
You're getting close on the Dow.
Are we?
Not loving it, but why don't you explain that one? And maybe even turn it on to Sim and let's just watch it in action.
All right. So here's how you turn it on to Sim if you're using one of these indicators. We turn them all off. Now, YM, I've got it set up for live. How do I know that? So if I'm looking at this particular, where's YM? YM, I'm looking for the auto edge trader, okay? And so I'm going to look over to the right, and I've got it set up for my personal account. So I'm going to change it. I'm going to edit it. Go in and change this to Sim. And now I'm ready to go. When I turn it on, then I can turn this button on, and it's going to show it and take it if it qualifies at this particular edge. We're looking at taking an inverse trade. Just submitted the trade. So now what's happened? It was looking for a valid trade. I didn't have to qualify it. I didn't have to pull up the max risk parameters, do all of the calculations on YM, pull down YM. So 40 points is our max risk. Our swing bar is 33. So it's doing all of this calculations automatically for me. And so we have a fabulous little tool in Razor. Now it's setting there and it's going to stay in play till one or two things happen. One, it pulls me into the trade. And when it does that, it's going to pull up my all in, all out scenario for this particular trade that we're doing. It's called an edge trade or a reversal off the top of a high volume area. It's called an inverse trade technically. And unless it trades through that order that's resting on the screen, I'm not into this trade. Now, once it trades through it, if it does, then it will automatically put my target on the screen to get out, and it will put my protective stop on the screen. And I've got mine set up for swing bar stop. I believe that's what they're set up for. I'd have to look at the parameters to be sure. So
money
could be. And here's the thing,
folks.
we can just set this aside, and we'll come back to this and see what happens.
Yeah,
how about that?
No, go ahead and actually let's leave it up. Oh, you could switch over to the NQ.
Let's take a look.
Oh no, flew through, but go ahead.
Oh, all right. So now we just had an order submitted. This is simulation money that I'm in,
which is the Dow Jones Industrial.
YM is Dow. You have the Dow Jones Industrial, or not just the industrial, it's the Dow.
The mini.
Right. And so now
you only have to have $500 in your account to trade at one contract. Randall, you're in on what? 3 or 2?
I got 3 contracts set up for this.
Okay, so on 3 contracts, you would only have to have $1,500 in your account to take that trade. Doesn't mean you're risking it. Randall will go over how much you're actually risking. That's just how much you have to have in your account to take the trade, depending on your broker. But the majority of them are pretty competitive. So,
all right. So let's look at what we're risking here. Okay. So on this particular trade, the swing bar size. Let me pull this up. The swing bar size is 30. Okay. So 30 is the size of that swing bar. Let's pull the parameters back up. All right. So your max swing bar is 33. So that swing bar is close to being max. Now, why is that? Why do we say that it's close to being the max trade? Well, if that swing bar were 33 points, I've got to take into consideration my entry and my protective stop. And so for YM, our entry is always 2 points, whether we're going long or short, and our protective stop is always 5 points. So you add these two together, plus the size of your swing bar, and we would have been risking 40 points on this particular trade. Well, on this one, what are we risking? We're not risking 40, we're risking 37 points. So from the point of entry, this Razor's Edge calculated for us whether or not we had room to run or not. And it threw the
one
screen.
And as you can see, 1 point is equal to $5.
I'm sorry, yeah.
If you're trading on 3 contracts, that's going to make it a $15 per point.
Right. So, yeah, and what were we risking? So if you take 30 times 7, so it's 37 times 5, that's $185 that we were risking for one contract. And if we take 3 contracts, we're risking $555 on this particular trade. That's what you're risking.
Yep.
Okay.
Look at that. So, and then
that's what you're going to make should it go against you? That's what you're going to lose. If it goes for you, that's what you're going to make. If it goes against you, that's what you're going to lose. So you know what your entry point is. You know what your target point to get out with a profit and your target for a protective stop for your loss. So now you're in this trade until you're not. That's it.
And explain how the bot's doing that for you. What it's actually doing for you. Like you're able to just talk with me and you're not.
Yeah, I don't have to do anything. I'm hands-free now. Everything is done. Okay. It did it for me when I turned this little button on. Now, if I turn this off, it's going to cancel it out and I'm down 10 points, or that's 50. I'm down 150 bucks total on this trade. And if you'll notice, I don't have dollar amounts here. I do that for a reason, because I don't want to get anxious and try to close something else. I'd rather just look at the points.
No, I think that's a really good point, man. That's I always do. Okay.
You look at the dollars?
I do, but I know that a lot of people do get anxious and nervous, and it's just everybody kind of feels that thing. But explain a little bit, how did you get to that point where you realized I don't even want to look at it? Just I would rather just know that figure rather than the dollar amount.
For practice, for tons of practice of just getting putting trades on to the point where it is what it is. I'm either going to lose that money, I'm going to make that money, and you just have to become numb to that and be satisfied with that. People will say, "Oh," sometimes, and Patrick, drilled this into me. Don't ever begrudge that I only made $50. Dude, you're $50 richer than you were when you first started this, right? For that particular day. Don't minimize a win. A win is a win. A loss is a loss. And that's how you have to look at it and just accept that. So just accepting it, Fabs, I don't know how to tell you how I just have traded so much. Yeah. And when I put it on, I know that it is gone until I get it back, or I don't get it back. That money is gone. That's how I look at it. And once you get up to multiple contracts, this is only 3 contracts, right? But if you're doing 10 contracts, that's a lot of money. It's a lot of money. And some people get a little dicey. They start fretting about it and start looking at these. And, I know that I'm in the negative as long as it's in the red. When it goes green.
Once that gets that green, just like it did.
Yeah.
It's green
up there. So
those greenbacks start rolling in.
I hope that shared with the people how I got there. It just takes time. It takes effort. Now I'm just sitting here waiting for this to either take this trade or not.
Yeah.
Now, let's look
at
absolutely
did.
All right. So when I have taken this, I just wanted to show how it was.
Keep it rolling. Let's see how it plays out.
Keep it rolling. Right. We'll see what happens. But in real life, I probably would not have taken this trade. And here's why. We've already moved up. We came back down, moved up again, got rejection of higher prices. So
in contract high.
This is contract high, the blue line, or cornrow blue, they call it, is their contract high. So we got big rejection there. So from here, all room to run that I have is from here to here. Here's the thing where the program does not do for you automatically. You have to still manage the trade, okay? And so taking an inverse this close to the point of control is dangerous. And the inverse is designed to be taken when it's pulled away from the point of control, hits an edge above us, and then moves back to that point of control. So this is not the greatest inverse trade to take. Now, technically, it is the first time back at an HVA edge. That's one of the rules as well with an inverse trade. It has to be the first time. Second time, third time, not such a good time to take these trades. And what time are we trading this? This is another reason. This is Friday and it's lunchtime. All the traders basically have closed shop for the day. But it's still, they could come back around 2:33. I don't know how long we will be in this. We may be off the air when this trade finally ends. Either it hits my protective stop or it hits my target. And that's how you do this. It's hard. It's hard to do sometimes, sitting there, waiting. And this is part of the discipline of just waiting until it either works for you or it doesn't.
Yeah, let's go back in time a little bit, and I want you to show, just because, man, I love doing this. This is one of my favorite things to do.
Which
you look
market
at,
do you want to go back?
That one, just pull up the YM again.
YM?
Just let's scroll back in time a little bit and let's see how on point those HVAs are. How many times it bounced directly off of the HVAs that were called out last night. Okay.
All right. So let's go back to when the market opened. Okay. So the market opened at 6 p.m. yesterday, 6 p.m. Eastern Standard Time. This is when the market opens. And so all of these HVA edges are valid through the overnight, and then they reset when the session opens at 9:30 for YM. So when we opened right here, there's no trades. We're in balance. We're right at an HVA edge. So what we like to do is we like to see the market pull away, move down to an edge down here, and then give us a valid reversal based upon the parameters and pull us back to that point of control. Ideally, what I would be looking for is for a trade all the way down at, okay, so let's go over to what just happened. I'll come back to that in a second. So we just had our first target hit, okay? Now we got one more. Why is it showing 3? I'm not sure.
Oh, you're on Pit Viper, not Edge, right?
No, I'm not sure. This should be Razor's Edge. I'm not sure what happened
looks
here.
Like that's that. No, well, yeah, that's right. You did turn it on Razor's Edge.
Yeah. I'm going to close this because
you have Pit Viper. Yeah, close that out. I don't know why that would have unless
there.
It was. Yeah, no, that is definitely Razor's.
Yeah, I'm not really sure what happened there. So
sorry, break down the trade.
Yeah. So anyway, what happened with the trade? Now you saw it went away when I took that. When I took that order off the screen or took the Razor Edge off of the screen, if I throw it back on the screen, it still doesn't come back. Okay. So now I took it off, and to get my trade, you have to go up to the top left-hand corner of the screen where it says chart. You right click and then duplicate window, and that order or that trade came back. Okay. So you guys saw how long we were in that for. 9 minutes, thereabouts. And so that was our swing bar. That was our entry bar. Our protective stop would have been down here. Our target to get out was right there. I'm not sure why this thing had a trailing stop. It should be all in, all out. I'm really not sure what happened there.
Well, I'm hoping that we're gonna add that in, though. I'll bet we will. I would bet that we will add that in.
Oh, I'm sure we will. I'm sure Preston's probably already working on that. But that was that's where I should have gotten out completely, and it left an order on there. I'm not really sure why, but we'll figure that out. But look what it was up. Well, it's not. I was already up $182 earlier. So the difference between 182 there is where when I have an order closed out, I do like to see what I was up or what I was down on the particular.
Yeah.
So that's how you do it. And we saw it. So now let's go back to what we were looking and when the market opened. So we can trade these edges in the overnight. Now, we never got any trades in this area. Why? Well, we're running along this HVA edge. Again, we like to see the market pull down. And ideally, I would have loved to have seen a pullback down to the 38,212 area, because that is an area of high volume area and the previous session's low range. So that is a great place to take a trade long, especially the overall market is what? It's long. Buyers are in control. So that would have been the ultimate trade. So let's just go along and see what, if any, trades we get. Okay, so we had an inverse trade that's set up first at this edge. Dangerous trade because we are so close to the contract high. You could easily get pulled up into that for a stop out, but you could have looked to go short on this. Let's see what happened. If we go short and we went short, we would have made our profit 1-to-1, would have been out. Boom. So that was news. So you see, when news comes out, we teach students to stay out of news 5 minutes before and 5 minutes after. So this trade set up at 8:10. So you still have 20 minutes before the news is out, or actually 15 minutes, because you want to be out 5 minutes before. So this trade would have been a valid trade. You would have made a profit on it, and you would have been out of that trade before news came, I think.
But just look how it, I mean, that was called out the night before. It bounced directly
to the point. Look at that.
Directly
Is that
off
not
that
incredible? Huh? Yeah.
That's why we trust this stuff so much.
Well, that's it.
Well it works.
You know,
Look
we have to build up
look
faith.
Look in the Globex. Right before that, it literally came up, came down, and then when it came up, it bounced directly off the HVA. Came back down a little bit, came back off, bounced it again, came back down, tested it, and bounced directly off of it again. And then that's when it went into where the market opened.
You're talking about right here? Yeah.
Yep.
You're talking about here. Yeah.
Yep.
Yeah.
I mean, directly off of those HVA.
Boom. Yeah. So it has to do with market participation and market volume. That's what it has to do with. And Patrick's got a program that if you want to learn how to draw these HVA edges, you can do that as well. Now, news 5 minutes after, so we got to get to 8:35. All right, so now we're at 8:35-ish, and we can start looking for another trade. Okay, let's see if it comes up and stops where it stops again. Let's see if it'll stop here. Okay, so again, if we've been calculating the risk based upon the size of that swing bar. Swing bar is 86.55, so it's 11 plus 7, so you're risking 18. 18 from here. You definitely have room to run to get back to that area. So room to run from your point of entry, you want to look left and see what you've got to run into, because this is an area where it stopped going up and then kept going down. So somewhere underneath this area, you should have your 1-to-1. Now, you may have your 1-to-1 right where my crosshairs are, and you still got a lot of room to run to get up to where it stopped going up before. Well, you don't want to get greedy. You want to take 1-to-1 and take what the market will give you. And then when you get into work your way into money management and you start doing cover and runs, then you can work on getting more than a 1-to-1. But getting that single, getting that base run, it's just phenomenal. Now, we would have been brought in on the trade on the next bar, and we're moving sideways. So we want to get up somewhere in this general vicinity to get out of this. I'm just eyeballing it. I didn't calculate it exactly. We're in sideways, and now we're getting to the open at 9:30. It's not a good idea to hold a position through the open. If you're up, go ahead and take your profits, or just go ahead and take your profits. If you're down, go ahead and take your losses, because it's not a good idea to be in the market right when the market opens. And so we opened, and now if we'd held it, we'd have made money on that particular trade. And it's choices that we make. We recommend that you get out before the market opens. There's a couple of reasons
over
why.
time. It's over time. It's a safer play.
It's much safer play. So would have been a winning trade. Now, the market has reopened. All of these HVA edges have reset. So it got used up here. It's now used up here, and now these are reset. We can use them again. That's just absolutely amazing to me too, how that works that way. But it does. All right. So now we have another potential reversal long. Will it work? I don't know. It's our first time at the edge since the market has opened. What's the size of our swing bar? 32. It's within the parameters. Do I want to take it? It's the first hour of trading. The market's only been open 7 minutes. So what do? You reduce your risk in the first hour of trading. It's called amateur hour. Now, what we teach our new students is you're still doing 2 contracts, all in, all out. And that's what you would be doing if you chose to take that particular trade, because your entry is going to be here, and you've got plenty of room to run to get what we were risking on that trade. So what we were risking, 39 from 70. So we got plenty of room.
Yeah.
So we were in the trade. We pull it down to our 1-to-1, and we pull up our protective stop in case it moves against us. And I think 522 is where we need to get out. There we are. We're out. Profit. Now you
look at you took some heat, but look at those HVAs. Look at those edges. Look how well they hold up.
Right.
Just keep going. Go fast forward a little bit through time. Let's see how well the edges hold up and how many times it bounces directly off of those lines that were called out last night.
What's happening right now, it's building up today's point of control. That's what's happening right there.
Mm-hmm.
And now we got back up to the point of control. 90% of the time, from where the market opens, it will migrate back to, or I say back, it will migrate to the point of control, whether it's, but your market is beneath you and you're going up to it, or you're above it and you're going back to it. So 90% of the time. Let's see if this other edge holds. Let's move forward.
They love to fill those gaps, don't they?
Oh, dude.
Love it.
That's what they do. And now we hit it again.
Oh, right there.
Okay.
Directly.
We didn't quite get here.
Right.
But
when it got up to that area, look at it. I mean,
then look at where the previous set, you're getting a strong rejection right there, man.
Yep.
So let's see what happens. And that one would have been a loser.
Yep.
It happens. You're not going to win every one of them. Here's another one. Almost hit you could say it's touching the contract high. Would that have worked? Boom. And then we took this one because it's going with the trend. Going with the trend. Go with the trend. The trend is your friend.
Till the end.
Dude, that's pretty cool, right?
It is. I mean, this stuff is so much fun, man. I mean, the more you get into it, it's like, we gotta get Patrick back on here. It's funny how sometimes you look at the stuff that he's came up with over these years, and you look how well it works, and you're like, dude, how did you spot that?
So yeah, exactly. How did you come up with this, man?
Right.
So let's take a look at this real quick. All right. So this is the type of thing that a student will send in. All right. And this was a terrible trade. This is not a valid HVA. Now, it is a valid HVA. This is not a valid reversal. What would a valid reversal look like? Well, you want the market to move up. It'll probably move sideways a little bit and then continue on into the HVA area and retrace back. And you see, you need to look to your left because where it stopped going up is your target to where you can look to get your 1-to-1. And if your 1-to-1 falls within this area from the where it stopped going up back down to your point of entry, that's your 1-to-1. That's where a lot of people struggle with that, getting that, what that 1-to-1 is. And maybe
I want to give you a little shout out here, Randall. This part is, it's so crucial to the learning experience for all of our, not just our students, for anybody that's looking to trade, man. The time that you take and draw out this stuff, and then you go through and you write this out for not only them to just take and learn off of that trade, but then it's safe. They have that.
They have it to go back to.
For the rest of their life. They can always look back on that and say like, yeah, oh, Randall told me that in the beginning. I never even realized it, you know? I mean, I think that's honestly, man, you do a huge part in this where it's absolutely crucial.
Thanks,
and
man.
there's honestly, man, there's nobody in the business, I can guarantee it. I have viewed many different programs. I've talked and been pitched by many different programs. Talked to thousands and thousands of students that have went through other programs. There's nobody that gives you this kind of hand-holding. And I mean, man, just having the ability this part isn't him just saying, like a lot of traders out there, oh, once upon a time I used to do this and I made a couple $1 million at, you know, doing this or something like that. You're going through live in real time as they're sending it in, and you can go back because you have so much experience and say, all right, here, let me show you how to do this right, and critique it, right, in a way that says this can be repeatable. You just have to know step by step how to do it, and let me show you this. And then you write it out, and you take the time to not only show what they did wrong, but then show how to do it correctly if it did work out incorrect.
Even if you've got nothing but this area where you circle and say, well, this is wrong, this is not, and not do this, that would be good. But this is better because people can see. And they can keep this and they can go back to it and look at it. Dude, how much I wish I had something like this when I first started doing this, man.
Oh man, honestly. Dude. It was actually me losing money. It was direct. I was literally taking it and just losing money and then being like, oh crap. And
now that still happens today.
Yeah. But these people are learning how to do it on sim where they're not actually risking their hard-earned dollars, right? And you know,
they will be risking those hard-earned dollars, and
exactly.
So
you practice like you play, right?
Yeah, the beauty of what we do, quite frankly, has to do with we teach you basic steps, and then we build upon that foundation that we put in play, that we put in. Okay, look at there's a reversal. That is a phenomenal reversal, right? So let me pull up one student sent in. Let's see if this is it. All right, yeah. All right, so now here's an oil trade. That is a reversal. Now that's this student's fourth trade. Let me show you his first trade. First or second. Here's the second trade. Not so good, right? Here's how you build upon what you're learning. This is not good. And there are other reasons why. He made some errors in his entry. He commented about that in his email. Okay. He didn't have room to run on this one. Then his very next trade, look at that. Look at the difference. It's huge. This is a phenomenal trade. He used that bar as his swing bar. That's his entry bar, his 1-to-1. So, folks, going back and looking at this stuff and trusting what Patrick has drawn, Patrick and Preston draws them too and puts them out there. It's phenomenal. It truly is.
It is. It's powerful stuff, man. And I'm going to drop the link in this stuff below, but this brings me to the next point of something I wanted to go over. How you feel about meeting up in Vegas, bro? It's been too long, buddy. I miss you. I gotta come see you.
I'll probably have this gone by then.
Yeah,
the beard.
All right.
Yeah, I think I'll be done with that.
Trim mine down a little bit.
Yeah, mine's getting. Dude, I do look like Santa Claus, right? All I need is
a little bit. Yeah,
maybe not as chunky as Santa, but nonetheless, yeah, I'm so looking forward to.
Oh man, I can't wait! I'm so excited. April 22nd, we fly in, and then it's till the 25th. Here in 2024, and it's gonna be a fun trip, man. We got so much that we're all gonna go over.
Well, we're gonna be going over Bubba stuff, folks. If you don't know who Bubba is, Bubba Horowitz, Todd Bubba Horowitz is fabulous. I mean, he's
crushes. You can't deny those numbers, man.
He's already forgotten a lot that I'll never learn, right? But with options. But he's got this one program. It's called SPY. And for what I've seen of it, it is incredible. I mean, you turn it on, you address it once a week, and then you let it go.
Tells you when to do the puts, the calls.
That's whole
it. You just manage it.
Enchilada.
Manage it like
especially if you don't have time to manage trades and do that kind of thing. If you've got an hour, it's going to take you an hour to learn it initially. And that hour each week is going to be shrunk down to probably 15, 20 minutes once a week to address your portfolio and make adjustments accordingly. And
we got each one of the calls in. I mean, month over month on a 5K account, he was averaging over $1,000 a month in returns. Biggest drawdown was $400 in a month.
You're going to have those drawdowns. You are. It will happen. But the averages are in your favor, right?
Yeah, that's. So
they're going to learn about that. They're going to learn about that.
They got the longer term plays like that with options, right? We're also going to go over the hedging stuff, which is again longer term trades than what we're doing in futures. And if you learn how to do futures right, I mean, this is a cash grab. You go in, make your money, and you're out in a couple minutes.
Because you don't want to be stuck behind this computer all day. That's not what you want. You want to be able to get in, make your money, and then on your investments that you're holding, trading is one thing, investing is an entirely different thing. And that's the beauty of, we've brought both of those things together now. We have the ability to teach people how to invest their money, and they're the ones doing it. We're not trading it. They're giving it a direction. Now, if we get into the point where there is a letter of direction and you're telling somebody to trade it on specific areas, that's another thing that we're going to be talking about in Vegas. What else am I missing that we're probably a lot?
I mean, we got auto traders, we got LOD. There's a lot, man. And it's all going to be broken down. We're going to do live trading.
And I hope you're going to be doing your book. that you just put out.
Well, yeah, thank you. I will. I am definitely going to do a part on that, and I'm thinking it would be cool for those who can't join us to do a little webinar so you guys can join us from a distance.
That's a great idea, dude. That's a great idea.
And we'll break down just some of that kind of stuff. You know,
Yeah,
we'll do. You know, maybe we can even do. Maybe we'll even do one of our podcasts live in real
dude,
time.
that's a great idea.
Right there.
I love it. Yeah,
and then we can break down that kind of stuff right there.
Right.
Let's do it.
Yeah.
So let it be written. So let it be done, everybody. April 22nd through April 25th, 2024 in Las Vegas.
You get to see the Fabster and me. I think.
Yeah, we'll do it. We'll do it all live in real time. This has been fun, man. This has been another great episode. Thanks so much for taking the time, as always, my brother.
Yeah, thanks everyone. Thanks for joining us.
Everybody for joining in. If you like what we do, it really helps us out on the channel. If you like this video and subscribe to it, it helps us out immensely. So thank you everybody for joining. We'll see you next time on the Life and Leverage podcast.